rich and famous. Yay. On YouTube.
Hi, my name is David. You're watching a channel about options trading here, and options trading is not just an activity. It, for me at least, it is a lifestyle, obsession, an addiction, and there's others like me as well. But I'm a person who Friday afternoon, I'm not like, wow, this is great, it's the weekend. I'm bummed out because market's going to be closed until Sunday afternoon at 6 when I can see the futures reopen and see what's happening. In the meantime, I sit on my computer and I update Weekend Wall Street to see what's going on, or I look at other stuff around the world to try to see what's going on. And the obsession of being a trader has been going on for many years in my life. I've had periods where it was my only job. I've had periods where I wasn't trading at all. But even when my job wasn't as a trader, I still saw myself that way. This year has been particularly positive so far as money for me. If we look at my public account here on Thinkorswim, you can see if we go to the year-to-date number here, you can see that if you look at the total on the account, you can see the account is up about 100% on so far this year. We're just in a couple days into the second month of the year, so that's extraordinary percentage returns. However, it's not all glory in that I've had years where I didn't do very well either. The other thing I'm just pulling up for you now to show you is just my deposits and withdrawals from my brokerage account, because a lot of times people will show you a P&L. Now, I don't think that this year-to-date thing reflects if you've taken money out, so I think that's kind of legit. But I just want to show you also on here that I haven't. When people show you the balance on Thinkorswim, a lot of times they can just add money to the account, and they're like, oh, I'm up money on this graph, but in fact, they've just added money manually to their account. So I'm just gonna prove to you here that I haven't done that. Let me get out of the picture here for a second. So, really, very quickly. So here is my TD Ameritrade account. You can see the balance going up here. If we look at 3 months, you can see. And I'm just going to go to my activity as far as withdrawals and deposits, and you can see. I guess it's hard to see, but I guess this shows actually withdrawals from trades. I was trying to just show deposits and withdrawals from the bank account, but essentially I haven't put any money into the account recently. I did take out $1,000 in the last couple weeks. So anyways, the account's legitimately up about 100% since the beginning of the year. So that's very exciting. Next, let's go to the positions. All right, so what happened to me last week to make money is that I got short GameStop, and specifically I got short. It was this day here, where it says the second. I was short about 500, equivalent of 500 shares on this down move here, and that kind of made my week. Which kind of illustrates a point that, like, if you're kind of in the trading game here and you take a position, if you have a stock that's kind of oscillating like this one, going up and down, if you take a position and you hang out, it's more than likely that you can make money either to the short or the long side. GameStop seems to be hanging out right around the level of 100 right now, and I don't know how long it's going to stay there. My best guess is it is going to move lower from 100 at some point, but right now it's just been sticking around 100, and so it's been good kind of tradable back and forth. And so I have a position that reflects my view of the stock, which is basically that it's going to stay around here. So my position right now is I collect money as long as we stay kind of in this little area, and something's wrong with this. I'm not actually short 400. Let's see. So I have a position on that basically says that if we stay in this particular area, I collect money. It's showing me here collect $400 a day. Short gamma, which means that if we move too far away from here, I will lose money. But staying in this exact spot, I continue to collect money. You can see my delta shift here. If the stock moves down to 92, I'm no longer short. I'm flat. If it moves up to 113, I'm short, getting close to twice as much. And you can see stock moves up 10%, I lose 1,700. Moves down 10%, I make 800. That's kind of that. UVXY, many people arrived here because of my discussions on UVXY. UVXY here, the story has been that we had a down move in the market, and that made UVXY spike, of course, and we're kind of coming off that spike now little by little. Usually UVXY spikes only last about 24 hours. This one right here is currently, well, I mean, it depends on how you consider it, but if we take a look at a 20-day chart, you can see, if I get out of the way here, UVXY spiked here, and then it came off of it. So I messed up this trade. What I did was I got short right around here, but I didn't wait long enough. And so this day here, I got short in a bad way. I bought expensive puts. And so even though I rode this down $1 or $2, the puts I bought I paid too much for them. And so I actually ended up losing money overall on these puts. Now, I didn't lose a ton of money, but I lost a little money on those puts. But most recently, this last day here, I did get, I bought some puts again that were more reasonable price, and then I laid them off by selling another put against them. And so I was able to make, I guess, somewhere around $400 on Friday on that move. So that's that. I do want to talk to you about Ford, though, because I do have an idea in the stock Ford. Now, Ford, like a lot of motor companies, isn't that exciting a stock most of the time, but this one's been pretty exciting lately. And let's take a look at the Ford chart. Now, obviously, this moved on earnings very recently, but this chart's kind of all over the place, right? If we take a look at a year chart, you can see that kind of defines the story, is that it's had this big up move, and I think having to do, I apologize, I don't know a lot about the news stories with this Ford. All I know is the numbers that I'm looking at, and in a way, you can debate whether that matters or not, but the information is I don't know a whole lot about the issues facing this company, but I do see this movement here, and you can see we've moved way up. I think it has something to do with electric cars, and then we gap down on earnings. Now, we talk about the price level of options, and if we go in Thinkorswim here to Analyze tab, or even on the Trade tab, we can look at today's option statistics. And from here, we can see the 52-week high in volatility is a 64. 52-week low is 23. So if we look at options here, we can see we are in the high end of the volatility range. So if I go to options here and I look on the right, we can see most of these are in the 50s, right? So we're at the high end of volatility. So usually when you're at the high end of volatility, it's not something that you really want to be buying. But stock, it looks like it's going to move. It looks like, I don't know which way it's going to move. It doesn't look like it's going to stay at 18 very long, right? It's a gap to here, and it looks like it's going to move to me. Now, although when we look at the option statistics, and options are at the very high end of volatility range, if we look at the actual prices of things, stuff looks very cheap to me, right? Out here, let's go all the way out, 2 months out in April, the at-the-money straddle, which is to say buying the put and buying the call at the strike that's closest to where it's trading now, which would be the 18 strike. The at-the-money straddle is being valued here at about $3. So that means over the next 66 days, the options are saying this is going to move less than $3. Now, I think that's a decent bet to buy that this would move more than $3. Now, when you're making this bet, buying the straddle, it's not as simple as saying, well, it'll move $3. In the meantime, you could sell something against this. You could, if it moves $1 down, you could buy a little there, and then it moves $1 back up. You could sell it out. So there's ways to finance this straddle. Now, let's talk about investigating a trade here. So let's say I have in my mind, maybe I want to buy this April straddle. All right, well, we can model that. So I can go in here, and I can say, click on the offer of the put, and then I can hold control and click on the I'm sorry, I just clicked on the offer of the call. Then I can hit control, click on the offer of the put. So now we're setting up a trade where we're buying the call and the put, and you can see, as we just discussed, it's around $3. This is showing $3.05, but this could probably be had for $3 in the middle of the market here. But now I'm going to right click on this ticket. I'm going to select Analyze Trade. Okay, so this is going to show us some the Greeks of this trade. And Greeks are ways of evaluating a position or your risk in an option situation. Another thing I'm going to do here is, well, we can easily figure out how much this is going to cost. So it's $3. That means $300. It costs me $300 each time I buy one of these. So let's say that we buy. So 10 of them would be $3,000, right? So let's just say, for an example, that we were to spend the entire account on these, and we bought 100 of these straddles. What would be our position? Okay, so here it shows. So if we bought 100 of these straddles, we would be paying, theta is how much you collect or pay every day. When we own options, we're paying to have this position on. The reason we're paying for it is that as time goes by, this becomes worth less money, because the less days that are left, the less likely it is that this is going to move around. So each day, this is costing $229. Now, $229 just in a vacuum might sound like a lot of money, but in this situation, doesn't seem unreasonable to me. Now, this number is going to increase over time as we get closer to expiration, but just in general doesn't seem like a huge number. We can see, if we were to buy the straddle, if the stock were to move down 10%, we would make $2,700. If it were to move up 10%, we would make $3,700. And it's interesting here to look at the numbers once again, the actual raw numbers, because although the volatility number doesn't, the volatility number of the volatility level doesn't make this a good trade because we're at the high end of the range, the actual numbers here seem much more reasonable, that being that this stock could go to 16. When we look at the chart, it doesn't seem that outlandish that this stock could go to 16 in the next 2 months, right? Look at where it's come from and how much it's moved. To the upside, 1961. It doesn't seem out of view that this could go to 1961. That's right there, right? It seems wouldn't be out of the realm of possibility that in the next 3 months that this could go there. Let's switch to a chart that shows, let's show 180 days for now. All right, so 3 months is right here. So let's say 11, 12, 1. So 3 months is like that much in the chart. And you can see it's sat in this area for a while, right? So if it's sat like this, then this trade would not work for us, right? We would just be sitting there and we'd be losing our $200 a day. So, and that could happen, certainly. The trading is a risky business. But it could also move around like it has the rest of the time. This was like a month where it sat, but it doesn't look like it has any reason to just sit at 17. Now, certainly it could, but I think it's a decent idea to buy some premium. And the great thing, there's a lot of talk. If you watch Tasty Trade Network or a lot of different options trading strategies for retail, there's a lot of talk about how, in general, options are slightly overpriced, and selling stuff is generally an easier way to go with options because collecting money, you just collect money every day and you don't have to really do anything. But the one downside with selling stuff is you could wake up one morning and be in big trouble, right? You could wake up one morning and the stock is either way up or way down if you're short stuff, and it's a disaster. The beautiful thing about being long options, even though we're having to pay $200 a day for this trade, and that includes weekends, so you can't make any money on this over the weekend. You're still paying that $200 for each day. But the beauty of this is you could wake up one morning and be a hero, right? This thing could go to 12 the next day, and let's see what would happen if this went to 12. So you could wake up and this goes to 12, and you made $32,000, right? Which would be awesome. Or you could wake up and for some reason Ford got taken over. I don't know. It's up 30%, and you've made $25,000, right? So you put yourself in a position where something great could happen. Now, people put themselves in a position with lottery tickets every day where something great could happen, but the odds there are really, really against you. And, the odds is something that's very important in life. Yes, you have a chance of winning the lottery, but the likelihood is that you're never, ever, ever going to do it, right? Here, there's a better chance. The likelihood that we can actually have the stock go down 10% is much higher than that. And the likelihood that we can finance this position in another way is higher than that. Let me give you another idea that I've been thinking about in Ford besides just buying a straddle. Let's go back to the option screen here. And this is the kind of trade that I've liked doing recently. And this is a more directional trade. Okay, so once again, we look at the chart. Stocks come from 25. It seems to be trending down right now. You would give me that, right? Well, what's to say that it doesn't trend down just another $2? It's gone down from 25 to 17. So that's $8. What's to say it doesn't go down another $2 in the next couple months? So if we look out in April, the April 15 puts could be had for probably 48, 49 cents here, right? And that seems dollar cheap, right? You could buy this put and you could sell another put against it, for example. What if I bought this put for 50 cents and I sold these front week puts against them for, I didn't want to sell anything for 2 cents, so that's not a good trade. You could buy these and just wait and see if it kind of moves lower. If it does move back higher, these puts will probably still stay somewhere in the range, but you could sell something a little farther out, go out to 25 Feb, and these puts are 11 cents. Still don't want to sell something for 11 cents personally, but March 4, they're 16 cents. So you could sell these for 16 cents. I still don't like selling something for 16 cents. I'd almost rather just hold on them for 50 cents, but let's just take a look at this. So you buy the one put and sell another. So this is a put calendar, which is, as my friends know, I love put calendars. So let's say we buy 100 of these put calendars. So buying 100 put calendars would cost us, sorry, you exceed the quantity limit. I don't know why I put a quantity limit in there. Hold on one second. Let me fix this. Application settings, orders. order defaults, quantity limit, options, maximum quantity of orders. All right, so let's change this. Let's put it 500. Sorry about that. All right, so let's say we try to buy 100 of these options here. So 100 of these would cost $3,200. Let's model it. So I'm going to right click, analyze tab, just do like we did before. All right, so this way we are short delta, which means that we make money if it goes down, and we're actually collecting money every day on this trade just because that front month option is decaying a lot more rapidly than the back month one. However, see this, if we were to go down way past 15, we could start to get into trouble here. You see us, we're losing because this is a calendar. It performs the best if we go to 15. If we go way up, we're going to start losing money. It shows us losing 2,700, up 10%, up 30%, and down 30%. It shows us losing 1,000. A better way to maybe view this trade is to look at it graphically. So if I go up here under risk profile, under analyze, we can see it graphically, and we can see here, yes, we make money to the downside. And if we kind of stretch this out, we can see we make the most money if it goes to 15, makes sense. And our break-even points are 13 and 17 and a half. So that's basically, we're betting that it's going to go down a little bit. It's a very specific trade. Now, my idea would be a better way that I would do this trade would be I would buy those April puts, but I wouldn't sell anything against them yet. So what I would do is I would go ahead and spend, instead of spending $3,200 on the calendar, maybe I would buy 100 of the April puts, let's just call it 50 cents for a round number. So that would cost me $5,000, and then I would wait. So what happens if we buy $5,000 worth of these puts and the stock goes down to 15? Well, maybe we could sell the March puts against them, the ones we paid 50 cents for. Maybe we could sell some front month puts against those puts for the same amount, 50 cents. All of a sudden, we've got a free trade on. And if this was a free trade, and I think we can model this, so let's do that. And then what if we were to sell these Feb puts? And we'll just adjust the ticket here. So, and what if we were to buy the one put for 50 cents, and if we were to wait and this goes down and we could sell this other put against it for 50 cents, then let's say or 49 cents, let's say. So now we're just paying a penny for the spread, right? Effectively. And so this way, we're going to make money. As long as this stays in a certain range, we're going to make money, and the most we can lose is the penny in the end. Now, we're taking risks because we're leaning short. When we bought the 100 puts here, sorry, I have this included too. So this shows you here, we could make up to 10 grand if this stays in this certain range, and in the end, if we are able to leg into the spread for a penny, the most we can lose is a penny. So that's that has beauty. Now, the risk of this trade, of course, is that we've got to buy the 100 puts and wait. And in the meantime, if this does go up 30%, we're ultimately risking that $5,000, and we could lose it all if things don't work out for us. But I think it's a reasonable risk here. And if we continue to trend lower, you can see if it went to 11, it shows us making, once again, $29,000. But on the way down, I would be looking to sell stuff against this. So if I buy 100 puts, maybe today, right away, I sell a couple puts. Now, I don't want to sell stuff for 11 cents. In fact, I don't really want to sell stuff for anything cheaper than, I would say, about 20 cents against these puts, just because you're giving up that potential for cheap. But this is just a thought here. So the thoughts are that, in my mind, this stuff all in forward looks cheap. Even though we're at the high end of the volatility range, just from the chart and how much this thing's moving around, it appears to me like it's not just going to stop and just stay right where it is. it's going to keep moving because that's what it's been doing, is moving a lot. Could be wrong, but there's an idea for you. All right, I've been blabbing long enough. I appreciate everybody watching and tuning in. And if you're like me and trading is an obsession, then welcome aboard and continue to watch, and we'll see what happens next. But yeah, great year so far, up 100%. Now, I want to warn you that 100% return is not sustainable as a trader. I got lucky. There's no way I could continue to repeat that over time. And certainly if I was dealing with larger sums of money, it wouldn't be possible. But it is what it is for the moment. The account happens to be up 100%. I surely will not be able to continue to maintain that kind of success. It's just kind of an anomaly, but it's a fun anomaly. And let's continue to look at trade ideas together. A lot of people contact me, and you're welcome to contact me through my email or whatnot and discuss your own trade ideas. I try to make myself as available as possible to listen and to be someone you could just sort of sound ideas off. My goal is for all you guys to make money. I don't want you to follow my trades because I don't think you can make money as a trader by following someone else's trades. I think you need to come up with your own ideas and execute them. It's not a way to be successful in the end by following other people's ideas. I've seen many people like buy these subscriber services where someone tells them what trades to do, and it doesn't end well. So you need to do a little work yourself. And, you know, I have strengths and weaknesses as a trader, but one of my biggest strengths as a trader is that I'm willing to try stuff. I'm willing to jump in and say, hey, let's try this. Let's put this money to work here and try this idea. And it might not work, but I'm willing to jump in and make a trade. And I've noticed in the past, many people will study trading, will study options, but when it gets to actually making a trade, they just can't do it. And sometimes you just got to jump in there, and especially if you're new to this, and I'm not talking about big quantities, I'm not talking about selling naked options, but if you're new to this, jumping in and just buying one put or one call and seeing what happens from there is the start. Anyway, thanks for watching. We will see you in the next one, and best of luck. Bye now.
You're watching Famous Dave on YouTube.
Happy Chinese New Year's.